All right.
That's a specific question about a mandatory shutdown
Yeah.
that's going around. All right, Ralph, your
All right.
report.
Back again with Carlson, Ralph Hipp here in the 13 newsroom, and Carl's at his place in Colorado there with our special Skype interview. And this is our regular segment for this month, Carl, the first one. And I know we're going to get together on April 1st again. No fooling about that. But for this part, in our segment with you, Carl, what is the Federal Reserve trying to do right now to bring some stability into the markets?
All right. So on Sunday, the Federal Reserve cut the interest rates to the banks to basically zero. So that was the second emergency drop in rates that has happened in the last month. And they're trying to get money to banks cheaper so that banks can loan money out cheaper to try to get a little more activity in the marketplace. All right. So they dropped the Fed funds rate. And then they also said they're going to buy $700 billion worth of U.S. treasuries and mortgage-backed securities to try to keep the rates low on those and the demand high. So that's the two key things. And the Fed is monetary policy. So the Fed can't do things like we're going to cut checks to everybody in the United States. They control monetary policy, which is mostly with the interest rates. They're dealing with inflation and buying and selling, quantitative easing kind of stuff.
It seemed, Carl, everything they've done so far, even in this week, did not have the desired effect. What effect are you seeing that having, and your comments on the Fed, and are they really doing things that aren't working?
Yeah, it seems that way. When they did the first drop in rates and it was an emergency drop, actually the stock market reacted negatively to that and fell. And we're thinking, okay, there's more panic going on. So, and then they did another emergency drop. And still, I think people are maybe thinking, can the Fed really do more? Rates are zero. And I think that made people a little bit nervous, just wondering, is what they're doing working, and do they really have much left in their tool chest here? So not a real strong positive reaction to it.
So they're going, okay, this is not working, or what do we do to make that work of what we want in the stability in the markets? You had mentioned we're all talking about the $1,000 checks this week, Carl, the economic stimulus package, $1 trillion. Senator McConnell, I will share with you, he wants to get most or all of this work done by midnight tonight on this bill. And Senator Chuck Schumer has said he wants to take this up first thing Monday. So we've got action being promised very quickly from both parties. What are your thoughts on that economic stimulus package, and is that something that might work?
So I believe it will, and I do think it's needed. I've heard some commentary saying that we shouldn't be doing it, but in my opinion, the way things are today with the people that they can't work, so they have to stay at home, restaurant workers, hotel workers, they're all shut down, so they're not getting paychecks. So we need to get something out to them just to. And so I think that is a great plan.
Carl, in all your years of doing financial planning for people, have you ever seen anything like this, of a stimulus of $1,000 per person? And also, let me toss in the question as we wrap it up here. How has all this with coronavirus changed the way you counsel your clients at Carlson Financial right now?
All right, so first question, we're talking about the stimulus there of $1 trillion. That's the most dollars that for a stimulus, I think, in history. But if you go back and you take inflation into account, there may have been some times where it was that much or more in the 30s, or even some in 2008. But I think by the time we're done with this, we're going to have quite a bit more stimulus than even that number, the $1 trillion. So part of that was $500 billion going to that $1,000 checks, and then we have $50 billion going to the airlines, $150 billion in loans to distressed sectors of the economy, and another $300 billion in loans to small businesses like mine to help make payroll. Now, right now, we are keeping all of our employees employed. They're working from home, and we have one person in each office that's staying in there. So we're working on getting through this, but now our clients, some are quite nervous, and understandably so. So we're having to do extra communication. Our chief investment officer puts out a communique every single day after the market close, what happened, what we're doing. So, and phone calls just to say, hey, it's going to be okay. We're going to get through it. And if it's making you nervous, we'll talk and we'll decide how to fix it when the market comes back.
Carl, we're talking with our hands. We're going to keep washing these hands. Thank you, sir, for that. Appreciate it. And we'll see you on April 1st as our next planned Skype visit with you. And stay well and appreciate your time with us today.
Sounds good. Thanks, Ralph.
Okay, sir. Well, we have Helping Hands Friday still on the way right after the weather. We'll take a break on Eye on Northeast Kansas and back after this.